Happy Friday, good morning, and welcome back to another Real Estate Mindset live video where we're going to go over a market update, real estate update, mortgage update, property tax update, and we're going to take your questions. We're going to listen to a few videos, and we're going to do a complete and thorough breakdown of the market. No matter what's going on, we're going to use the data, we're going to talk about the math, and what I'm really excited to talk to you guys today about is the update on the property tax fight. We have a response back from a DA that's a little bit more eye-opening. So we are making progress, and we're making progress at repealing property taxes because you guys are helping us do that. So I just wanted to say again, thank you from the bottom of my heart. Good morning to everyone. This person, it's nice to see you. Steve-O. Happy Friday, guys. I want everyone to be so lighthearted, smile. You know, the world is so much turmoil right now. I want everyone to have a good day today. P Nice, look at his logo, Mitch. He's got the Real Estate Mindset logo. I love this man. I see him all over YouTube, and I'm like, P Nice in the comment section. I completely embarrass myself, but I love you, P Nice. Thank you for joining us. And Dean has been with us from pretty much the beginning, as has Vovol, Chris as well. Really appreciate you guys. Good morning to you as well. Always appreciate you, P Nice. We're going to get started right away, you guys, on a quick market update. As we transition through this video, again, we're going to make our way to the property tax update. I do have the assistant DA's contact information in the show notes. So if you guys don't make it that far, just come back to the video, hit that chapter, and we need you guys to help us contact Valerie. Valerie is the Fort Bend Assistant District Attorney. So she's at least acknowledging there is violations happening in Texas right now with property taxes and that bond cap law. The problem is no one's ever gone after them this way, so they don't know what to do, but she's acknowledging there was a violation. And that, you guys, is huge because now that can become evidence because we have a DA saying a violation is probably there. So we'll go over that here in a minute. Mitch, I almost got ahead of myself, as I often do. How are you, sir?
Good. I was just staring at the market a few minutes ago, and gold is down. Platinum was up 7% yesterday, and this morning it gave it all back, which is good because it was getting a little ahead of itself. And NASDAQ is up just a hair, but it is actually dancing on an all-time high, which is pretty interesting from a technical perspective. It'll head, give or take, to about 24,000 and then reverse. So it's a very interesting market. The world thinks everything is fine. Okay, watch.
I know. The market seems like it just doesn't care about anything that it doesn't care about wars, bombings. It doesn't care. It's just going to keep going up. But let's go under the hood a little bit now, and I want to show you guys what's going on in the market, and I'm going to compare what's going on in the Dow, S&P, NASDAQ to gold and silver over the last 1 year. And if you guys have time, go back and look at the performance of silver and gold over 5 years. I bet you didn't know that silver outperformed gold over 5 years. Did you guys know that? Did you know that silver outperformed gold over 5 years? I didn't know that until last night myself. But let me tee this up right now. We're going to go into this section right here. And you know what? Let me get out of the way. I don't want to be in your guys' way. I'm going to do it like this, okay? So first and foremost, here we are with the Dow. So we got new record highs. Now, the Dow over 1 year, okay, let's scroll down here so you guys can see. So over 1 year, the Dow is up about 11%. So it's saying right here, even though it's hitting an all-time high, so it took all of this, oh my God, right, all this money from everywhere, and finally we hit an all-time high. Well, if you invested in an index or the Dow, you're up 10.9% over a year. What a bunch of turmoil. Now let's go to the S&P. So the S&P as well, we got a new record. So the Dow didn't hit a new record. The S&P did hit a new record. S&P over 1 year is up 12.2% over 1 year. And you guys are going to see again what the come up with metal is here in a second. Now here's the NASDAQ. NASDAQ also hitting a brand new record, barely sitting at 22,719. Now over the last year, the NASDAQ is actually up a little less than 14%. So NASDAQ up, as the recording of this live video, 13.79% over a year. Now, the interesting thing is when we go into gold now, and gold is down big. Okay, well, I don't want to say big, but for gold, right? Metals are generally not volatile, so the price is generally stable. So, Mitch, and I'll let you talk on this here in a second, but that's a pretty healthy dip down, 2.3%. You know, I don't know that someone would want to go in and start collecting gold with a small drop like this, but it certainly is a drop. But look at over 1 year. So over 1 year, gold is up. You guys can see right here about 40%, so 39.86%. So just put this in perspective. The come up on gold is about 3 times higher than the market over 1 year. So again, a mindless rock, roughly, not quite, but roughly 3 times the come up than the Dow, NASDAQ, and S&P. Is that not phenomenal to you guys? And now look at silver. Okay, so silver's at, I kind of feel like $36 is kind of that support line. I don't know. Silver down big as well. Look at this drop right here. And then it shot back up and it's kind of going down. I mean, very interesting. But over 1 year, silver's up 22.42%. So basically, silver had double the come up of the market over the last year. That is phenomenal to understand because, again, not only is gold and silver outperforming the market, as I've just showed you, it's also outperforming retirement accounts way more than the markets like pensions and 401ks. I tell you that because if you have a 401k or a pension, unless your employer is contributing, if your employer is giving you money for free, that's a great thing. But knowing what I know now, if you have a pension, if you have a 401k, and that's what you expect to retire on, it's a bit clownish. Okay, that's all I'm saying. It's a bit clownish because they're taking all your money. It's better to just purchase something like, again, a mindless rock. See that? I got some silver coin right there. Pretty cool. Anyways, it's $36 for that silver coin. It's not that much money to get in. But here is the price of oils. Again, the market really, I don't know if it was propaganda, in the Middle East. I don't know. I'm just glad that people aren't dying. I don't want people to die. I don't care where they're at. Nobody should be dying. Oil right now, back down to $65 a barrel. This thing shot up to what I think was $72, dropped back down. It's all over the place. And look at this, you guys. We kind of have a new record low. It went a little bit lower yesterday, but look at the dollar. And that's one of the reasons, and I tell my 10-year-old daughter this, I'm like, the more that the government messes up, the more that your gold and your silver is going to go up. So again, the more fraud, the more debt, the more that my investments go up. So keep committing crimes, I keep getting more money on my investments with rocks, again, silver and gold. But look at the dollar. That's absolutely despicable. So the dollar is losing its power. It's at $97.18 right now. This is the Dixie you guys are looking at. Let me show you guys as well the 10-year treasury. Now, this is affecting mortgage rates, and this has been going down, and residential mortgage rates have been going down. Today, they're going to start going back up, probably about 3 to 4 basis points. 10-year right now sitting at 4.28%. Again, you guys up about 4 basis points. So residential mortgage rates are going to go up. Let me show you guys a couple other things real quick, and then we'll listen to our video. Okay, now here's what the fiscal deficit, okay, because we're going to listen to a video after this that's going to be about Jerome Powell talking about how strong the economy is. And again, when we look at the math and when we understand fundamentals, sustainability, you cannot have with principles and morals, right? Good old-fashioned morals, you cannot have a strong economy if it's in debt. You cannot have a strong economy if it's spending money in deficit. And that's exactly what you guys see here. You see a deficit spending problem, which means they're spending money. Our government is spending money that they don't have. They don't have the money. They're just creating the money and debasing the dollar in the process. And that hurts you and I as mom and pop. We don't want them to devalue the fiat currency, okay? But they are, and they're running hot right now at $1.3 trillion. And the fiscal year isn't over. And I wanted to also let you guys know that's up 14% year over year. Now, that's just the yearly spending. When we look at the actual debt, okay, so the accumulated debt is actually about 37 trillion, but I wanted to show you the trajectory. I wanted to show you this trajectory because understanding the debt and fraud bubble is very important at understanding what's going on in the economy and why, at least Mitch and I think, and mathematically, that there's going to be a collapse in deflation happening. Nothing is sustainable. Fraud and debt. And you guys see that trajectory right there. But if you want to look at the debt to GDP, you can also see it here. Absolutely skyrocketing. So the debt to GDP, according to this, is 123%. Depending on the data that you guys look at, it's going to be higher. My point, again, in telling you guys this and showing you that is, yeah, the market's at all-time highs, but it should be because also what's all-time highs is the debt. The debt is all-time highs. The deficit is all-time highs. So yeah, naturally, because the government interferes with the markets, they're not free markets. They're mutated markets. This is what we have. Now, I'm going to listen to a video. from Jerome Powell. Okay, so we're going to listen to a video for Jerome Powell here in a second, and he's going to talk about how strong the economy is. I showed you guys the deficit. I try to make my point. You can't have a strong economy running on deficit. They're just fooling us, right? It's like a teenager spending money on a credit card saying, I'm rich, but you're not rich because you're leasing that Mercedes-Benz 500 and you're paying $1,500 a month just to service the lease. And you don't even own the Mercedes. You're in debt and you can barely pay it. And that's what's happening. But Mitch, before I move on to Jerome Powell, any comments you want to say on what I just went over on the investments, the yields, anything?
I think that in reality, we have a math problem and we have a debt problem. And both the math and the debt are completely ignored in favor of the narrative. The problem with the narrative is that it's equity stripping everybody's money. And therein lies the ultimate problem with all of this. It's all connected. But if you believe that the market is going to continue to run on the long term, given the amount of debt that's out there and is being printed, and so when they print money, your purchasing power goes down, you would be wrong. It simply can't. It's not sustainable. And we've proven that with the median household income in multiple jurisdictions throughout Texas, where the debt load, i.e. Argyle, Texas, is $343,000 per house, and outstanding fraudulent school district bond debt. Well, if you take that and add that onto that person's mortgage, just a typical house, how is it going to get paid off? Well, the answer is it isn't. And that's the equity stripping. That's the hollowing out of mom and pop's reserves and mom and pop's retirement and no inheritance for their children. It's not sustainable under any circumstance. So I think the narrative, maybe the best way to look at it is that the narrative, you can't eat it. What you can do is understand what's happening, be able to articulate it, and do the best you can to hedge yourself against these problems that are real problems. These exist. There's tens of thousands of people between now, literally in the next 3 days, that are going to end up with tax liens on their houses across the United States. There's going to be hundreds of thousands of people by the end of the year. These problems are real. It's not going away. So it's a math problem, ignorance on behalf of the politicians. It's a debt problem, ignorance on behalf of the politicians because they don't even know what an amortization schedule is. And the combination paints the narrative, but the narrative is completely false.
Well, at least our viewers understand what's going on, Mitch. At least the viewers that are watching us right now understand there is a fraud and debt bubble issue, and hopefully they're hedging themselves. And I always say this, all right, if you live in America, you probably have a spending problem. You probably have too many subscriptions and are not budgeting properly. Probably. Okay, I know I'm not, and I rebudgeted like 8 times in the last 3 years. So let's move on to the video right now. Let me do a timestamp. This is from Jerome Powell. It takes a little bit to get started, about a minute to get started, but I think it's important to listen to the tyrant who is running our country with a bunch of his buddies. And obviously I'm talking about the bankers because that's exactly what's going on. At least you guys, at least in my opinion. And if you guys can, let me know that the audio is okay, and enjoy listening to this charlatan.
Senator Britt. Thank you very much, Madam Vice Chair. Chair Powell, thank you for being here with us today. I want to start just by echoing the comments of Senator Cortez Masto when it comes to community banks. Obviously believe that community banks and credit unions, financial institutions that serve everyday Americans and main streets across the great state of Alabama and our country are so critically important to people being able to actually achieve the American dream. And want to make sure, I know we've talked about this the last few times that you've been in front of us. We've talked about the rewrite of Basel III. We've talked about long-term debt. We've talked about Reg II. We talked about a ton of things and talked about my concern that no one was looking at the cumulative impact of those things and the trickle-down effect. I just want to get a commitment from you that as you are reviewing rulemaking across the board, that you will consider and make sure to make the perspective of the smallest U.S. banks and non-financial industries like the ag sector who did not maybe have a seat at the table in previous administrations, but give them a seat at the table and make sure that you're thinking about the impact on those individuals and the people they serve.
I'm happy to make that commitment.
Thank you so much, Chair Powell. I also want to talk to you about an issue that has been brought up briefly today by another colleague of mine, but that is about childcare. So when we look at the childcare crisis in this country, we know that our economy loses about $122 billion a year because of affordability and accessibility, reliability, if you will, of childcare. It is said that anyone who has a child between the ages 0 and 5 actually spends 22% of their income on childcare. We have done the studies and looked at the numbers, and 59% of stay-at-home and or part-time working parents say that they would like to re-enter the workforce, but that affordability or accessibility is an impediment to do that. As we are looking to build back America, as we are looking to create opportunity and bring those things into fruition, would you agree that taking a look and being able to address, not asking you to comment on any specific proposal, but addressing some of the shortfalls related to accessibility and affordability of childcare would have a positive long-term impact on the economy?
So I think there's quite a bit of research showing exactly that, and we really saw it during the pandemic. As I think you know and pointed out, it's not an issue that we play a role on, but clearly it would contribute. Childcare would contribute to participation in the labor force by many.
Absolutely. And as Alabama looks, we look at our labor participation rate. It is 5 points lower than the national average. We continue to look to ways to get people re-engaged in the workforce and know that addressing this head on will help us be able to achieve that. So thank you so much, Chair Powell. I look forward to continuing to work to get that done. So there has been some angst vocalized about the reconciliation bill and the president's trade policies. And from my perspective, much of that skepticism is both unfair and premature. Market resiliency and recent economic data actually continues to reflect confidence in the U.S. economy. Look at the recent Treasury auction, which was notably successful and saw stronger than expected demands for 30-year bonds and stable, even slightly declining yields. To me, this demonstrates that investors still view the U.S. debt as an attractive asset, regardless of the ongoing policy discussions and debates and forging a pathway forward. And those fundamentals of the economy, actually remain quite strong. Chair Powell, would you agree that the components of our economy actually remain quite strong? And how does the Fed consider this type of strong auction performance in the context of your market expectations and monetary policy discussions?
As you point out, the Treasury market is working fine just now. Liquidity is adequate, and bond prices are responding to economic events, and so bond market's in good shape. In terms of the strength of the economy, I would strongly agree. The labor market's in a solid place. The economy's growing. Inflation is in a pretty good place, come much closer to 2%. So it's a very solid economy. We are watching the labor market very closely, as we always do. And a couple of things in particular. One is just a very low hiring rate, which goes with a low layoff rate. But if we were to start to see layoffs, we would see unemployment go up quickly, and so we're watching that carefully. But the labor market has remained solid, and I would agree with your overall characterization.
Thank you. Appreciate you being here today.
Reliant is the home of free electricity.
Okay. Mitch, what do you think? You're on mute. What do you think about that?
These people are economic ignorant. The shortfall of daycare so that parents can re-enter the workforce is not the issue. It is true. They may want to go back to work. It may be true that it's 22% of their income is going to daycare, but that's not the causation. The causation is the inflation. The inflation is a direct result of the Fed printing money, and that is what creates the debt load. So in truth, it's the Federal Reserve on the federal side that has created the debt and that has equity stripped these people who want to re-enter the marketplace, and they can't articulate it. But you have the exact same problem. See, it's 22% for daycare, as she's claiming. But here's the interesting number. On the real estate tax side, it's 9% plus across the United States of the gross income of every property home owner is going towards real estate tax. These are a mirror image of each other. Federal Reserve over here, central appraisal districts over here, doing the exact same thing, equity stripping mom and pop. She says the American dream. These people are completely clueless.
I agree. Okay. All right. I'm going to go into our mortgage update real quick. And again, after the mortgage update, one video, and then we'll go into the property tax update. So let's show the viewers what's going on with mortgages here. Let me throw this up like this. So let's look at demand first, y'all. And what you guys are looking at right here is you're looking at mortgage purchase application demand. Let me go down to the refinance first, and let me make sure this is over 5 years. Okay, so here we go. So the demand is in blue. Okay, the line, this orange line here represents the interest rates. And you guys can see that it's basically as soon as the quantitative tightening started happening, demand started going down because not only did you have the interest rates going up, you had prices skyrocketing as well at the same time where income didn't go up. So we're literally in a worse situation right now, being that we have less money saved and bankruptcies, defaults, all of these other types of things are going on. But mainly what I wanted to show you is how refinancing has gone up slightly, but nowhere near where it was prior to quantitative tightening. Now, the fact that this is going up slightly is super discouraging because what it means is generally what it means is people are refinancing into higher interest rates, probably to cash out. Because again, this is refinance. So why would you refinance into a lower rate into a higher rate? You can't do that. It's against the law. First of all, in order to, as a loan officer, in order to refinance someone, you have to prove through underwriting that there is a benefit to refinance. So the only thing I can think of here is cash out. And again, someone refinancing into a higher interest rate and cashing out, that's a double whammy on their mortgage payment because their mortgage payment shoots up, but also they start their whole amortization schedule over again. So refinances are going up. And again, it's crazy because I mean, you can't refinance into a lower rate right now. So I don't know why this is going up other than the cash out thing. Now here's purchase applications. It's really easy to see right here that people purchasing homes, that hasn't gone up no matter, regardless of the kind of the whipsaw going on with interest rates. Demand has pretty much been in the gutter the entire time when it comes to purchasing new homes. Now I've talked to Melody Wright about this and I agree with her conclusion, which is demand is going to go up as prices come down. And more than likely, if home prices go down, we're in the midst of a recession, there's going to be turmoil in the financing institution because of deflation. There's a likelihood, there's a probability that as prices go down, we hit into a recession, interest rates will go down at the same time as prices. That's exactly what happened in 2008 and 2009 and actually 2010, 2011. Prices of houses were going down at the same time that interest rates are going down. Different circumstance. Obviously, right now we have a lot more inflation. We are a lot more leveraged up. There's a lot more toxicity and it's a everything bubble. So it's way different than before. I would argue it's way worse. Now, here's what interest rates are doing. Okay, so residential mortgage rates almost went under 6%. Okay, and I'm talking about FHA right here where I'm circling. Now, remember, Lennar, the home builder, the number 2 home builder in the nation in Houston, is offering I think it's a 3.75. So it's about 3% under this 30-year rate right here for FHA. To buy the rate down that much, guys, costs, it depends on the loan amount because it's a percentage, but it costs anywhere from $30,000 to $70,000. Because remember, and I always try to teach you guys this, it's not the rates that are going down up and down every single day. What's going up and down every single day is the cost of the interest rates. Because remember, even though it's not reflected here, technically I can get someone as a residential loan officer, I can get someone a 5% 30-year fixed rate right now. In fact, Lennar can get you, case in point, Lennar can get you a 3.75% right now. But to do that, the price, because that's what it's about, is going to be $50,000. Okay. So remember, it's the pricing that goes up and down every day. Also remember that generally FHA is cheaper minus the mortgage insurance than conventional. Conventional has a higher rate sitting at 6.72. FHA, a lower rate at 6.21. Depending on what your FICO score is, your mortgage insurance can actually be lower with FHA, but it will last forever unless you have 10% down payment, and then it will last 11 years. Now, I want to show you guys an affordability calculator here in a second, but before I go to the affordability calculator, let's talk about an amortization schedule, because if you want to be a competent homeowner and you want to get out of the system, you don't want to be a slave to debt, you must understand an amortization schedule. If you want to understand the school ISD bond fraud debt, all of the fraud that's been going on that Mitch and I have been talking about, you also must understand an amortization schedule. And the reason is, this is the bottom line here. This is why you want to understand this. It's front loaded with interest. Okay. The way that these work, you pay your interest before you pay your principal. Case in point, year one, okay, of this loan, and this is a $500,000 loan over 30 years at today's interest rate of 6.72. So if you get today's rate, you buy a $500,000 house, you'll pay back $1.16 million. Okay. You're going to pay back $663,000 in interest. And you pay this here, the $663,000 before you pay your loan off, because year one's right here. You pay $33,000 in interest in year one and only $5,300 in principal. But you go down to year 29, you only pay $3,800 in interest and $34,000, as you guys can see here, in principal, which means it is front loaded with interest. And if you really want to invest in yourself in your retirement, you got to take care of this thing here. And it's very easy. If you want to pay biweekly, biweekly is only paying one extra mortgage payment per year. So if the mortgage payment is $3,200, all you got to do is pay $3,200 extra per year, or just do biweekly. Now, if you want to be a superstar, and I'm hoping you do want to be a superstar, just pay 2 extra payments per year. Okay, maybe one in June and one at the end of the year in December. If you do that, let me show you what happens. Okay, so that would be what, $6,400 roughly. So if you pay $6,400 per year, let's see how much money you save. Okay, so if you do 2 extra payments a year, you turn the loan from a 30-year loan into a 20-year loan. So you don't technically have to refinance because you can just pay it off early. Look at 20-year loan, and you save, gets me every single time. Every single time this gets me, you save $254,000 in interest. I hope you pause this video and you understand what we just said, because if you wrap your mind around what we just said right here, you will be ahead of most homeowners around the nation. Very few people understand what I just showed. This thing is a death trap. Okay, the second you become a homeowner, and if you're naive, if you go and purchasing a house naive, the second you become a homeowner, you are now imprisoned in debt forever. So it's really important to purchase wisely and understand what homeownership actually is. Now I want to show you this. Okay, this is very interesting. You're looking at a debt to income ratio calculator, or rather an affordability calculator. And the reason I'm showing you this is I constantly tell you guys during the turmoil, during how out of control things are right now, we want to do the best we can to maintain our purchasing power. We cannot take advantage of deals of our dreams if we no longer have purchasing power. Even if your purchasing power gets dinged, it's okay. Just never give up on yourself and never give up on your goals. And I'm telling you guys right now that it is a huge problem that is spiraling out of control around the nation. People are giving up on their goals. But just as soon as everyone gives up on their goals, guess what? It's time to buy again. Every single freaking time. So as soon as you give up, everyone's going to start buying again, and you're going to miss out on the opportunity if you don't listen to what we're saying. Now you're looking at a debt to income ratio. Okay. And I'm taking a household that's making $100,000, 30-year loan, today's interest rate. Now I'm putting for car payment, credit card, personal loan, and school loans, $1,500 a month. Okay. I think that's pretty realistic. So $1,500 a month in debt payments. Okay. We're going to do a conventional loan at a 28 to 36% debt to income ratio. It's a front and back end. Now let's calculate. If you're making $100,000 a month, and you have debt, because I said don't have any debt, the best you can. If you, and listen, guys, it's okay to take a couple steps back. I've taken a couple steps back this whole journey over 3 years. I've been transparent with you guys. I've taken steps back, but I've never given up, and I've maintained my purchasing power. In other words, don't discourage yourself, but watch what happens. Okay. If you have $1,500 in debt payments, you make $100,000 in annual salary, you only qualify for a mobile home. All right. And it's probably not the best mobile home. It's not going to be in California. The California mobile homes, I'm sorry, mobile home. I feel like a rookie saying that. It's called manufactured home if it's built after 1976. Okay, pre-1976 is a mobile home. They don't call them mobile homes anymore because they're not mobile, right? It's not easy to move them. But look it, you only qualify for $190,000 if you make $100,000. Now, if I were to remove the debt, all right, so I don't have any debt, I'm removing that $1,500 a month, my approval goes from $190,000 to $296,000. I have just increased my purchasing power by over $100,000. $100,000. And my friends, that is how debt to income ratio works. And that is why we constantly say do not have debt, not only because of the cash flow, but also because it limits your qualifying parameters. You just saw right there the difference of $1,500 in debt. So you have about $1,500 in debt, you're making $100,000. You have just sliced about 40 to 35% of your purchasing power. So no debt, increased purchasing power. The more that you get debt, the more you shave off your purchasing power. That's the point I'm trying to make. Let me tee up this next video. But first, Mitch, anything I missed there, sir?
Continuing the line of thought that Travis was on, which if you want to invest in yourself and your retirement, ask the people who are running your 401k and your pensions, what is their process to hedge the underlyings in your portfolio against the downturn? That'll be the first question. Watch what the answer is. The second question would be, can your process be maintained delta neutral? With those two, you will get the truth as to who's running your money and what they're doing.
Okay. Do you think what's more important, Mitch, buying gold or paying off your mortgage?
Paying off your mortgage.
Why?
Because it gets you to debt free. There's no reason you shouldn't be doing both, because the truth is that the gold or silver is a hedge against the devaluation of the currency. So you're living in both worlds in perfect harmony, because you want to pay off the debt and you want to protect your remaining currency from devaluation. And the only true mechanism right now today are those precious metals. I believe that Tether is on its way, but it's not proven that it can go past its current stage. It needs to be something that can be seen across the population versus a test scenario. And right now it is a test scenario, but these things are coming. As AI gets smarter and Tether gets smarter, they will be able to do peer-to-peer, business-to-business, person-to-person in terms of swapping one asset for another. You'll be able to swap gold for silver instantly, eventually. You'll be able to use Bitcoin for something once it's backed by an asset, eventually. But right now, the safest thing to do, pay off your mortgage as fast as you can. And if you've got a little bit of excess capital, then absolutely go into precious metals. Because if you think that this market is going to keep going at the clip it's going, you would be horribly wrong. If you look at it from a technical perspective, NASDAQ will hit 24,000 and it'll start to peel back.
Okay, so NASDAQ may hit 24, peel back. I will look out for that. And I really appreciate that. I'm going to get into a video. We're not going to listen to this whole video. After this video, then we're going to go into the update for the property taxes. I need you guys online for when we go over that update with property taxes, because you guys help us get this far, and we have a really interesting response. But this next video is going to be from the Chicago Fed president, and he's going to say a lot of things, but they're going to eventually start talking about tariffs and how they need more clarity for the tariffs, because the tariffs haven't even impacted things yet. They haven't even impacted. So all of this turmoil and all this nonsense is related to the debt and the fraud. Not yet the full impact of the tariffs. So you can't just blame everything on the wrong thing, right? I know it's the talking heads' opinion, but they're being scripted. All these talking heads are being scripted to say that every single time. So I hope you guys like this video. Let me do our timestamp here. And if you guys would, please let me know that the audio is doing A-okay. I'm going to mute us now. A-okay? Did I really say that?
Chicago Fed President Austin Goolsbee joins us now exclusively here on CNBC. Austin, you heard the data, and I don't need you to comment on the details of the data, unless, of course, you want to. But everything looks like it's doing a little better. You know, the desert island indicator, jobless claims, it just really fails to go up. And maybe it's green going to yellow, but it's just barely so. What's your take on this data?
I mean, I thought two things. One, I gotta get Rick over to the bank and take him to lunch. We're both here. It's been a while since I've seen him.
You still owe me lunch.
Look,
Joe,
the thing about
later,
the job market. Yeah, the thing about the job market, Steve, is Look, when we were really going to go back into this, the money you owe me and the meals you owe me, but now you can't pay
No,
me
we're not.
because
We're
the
not.
ethics
We're
rules
not.
forbid it. But
We're
one
not.
of these days, Joe, I'm getting over there.
I would like to go with you now with the new Austin. I would. I love you now. I don't know what happened. Someone dropped you on your head or something.
So look, here's the thing about the data. On the job market, it feels to me like we get continuous months that emphasize we're a pretty steady, stable, full employment kind of circumstance. Middle of last year, when things were getting worse, cooling at a steady pace, you could make the argument that most of the time when the unemployment rate rises, let's say 1 full percentage point over a year, that's usually an indicator of something of the business cycle, and it's going to get worse. But what we've seen in the last year is stable full employment, and nothing has changed with the UI claims or with the broader measures of the job market in my mind that have bumped me off that view.
What about inflation when it comes to the concern that some have that tariffs will raise inflation, but it didn't show up in the May numbers? Do you think it's coming?
I don't. That's the big question mark. I mean, I think the most important thing to figure out is the through line of where are we going. And I said before April 2nd, on dual mandate grounds, we were doing pretty well. Stable, full employment, and I felt inflation coming down in the mid-2s and coming down toward the 2% target. And in a circumstance where that's prevailing, I believe that the rates will go down a fair bit more from where they are today. And you can see that in the dot plot. If you look at what the members of the committee, where they think the settling point is, there's pretty wide agreement. It's well below where we are today. The tariffs and other uncertainties in the economy threw a bunch of dust in the air. So I do think it's important that we get clarity, A, that there's not going to be an increase in inflation, or B, if there is going to be an increase in inflation, that it's not going to be a lasting increase in inflation, that it is in fact going to be transitory. Now, like you say, Steve, we've had 3 but 9 months of inflation readings. And for a month and a half of that, we had the beginnings of tariffs. So if tariffs stay in their lane, which is to say imported goods are only 11% of GDP. So if people don't freak out and change their behavior, and if we don't get a lot of retaliation from other countries, and if we don't jack up the rates on raising the cost of domestic production, then my hope would be that we don't see the inflation. But we got to get a few months of clarity before I'm ready to say that they didn't have an impact.
When you say a few months of clarity, that sounds like it would be difficult for the data to meet that criteria as soon as next month.
I don't know. You know, I don't like tying our hands or restricting our actions before we've gotten all the information we can. And you've been to the room where the FOMC meeting takes place. It's literally the biggest table I've ever seen in my life. So everything is always on that table. It fits on that table. But we still have tariffs coming. July 9th, we're going to get another announcement. We've got the China deadline. So just on the tariff part, we still have uncertainties. And we've got to see how many of these others play out, whether it's oil prices and geopolitics or what's happening with productivity. So I'm optimistic that we've been getting good readings, and maybe the impact of tariffs will be held just in their lane. But we want to be sure. And at moments where there's lots of uncertainty, as I say, you just got to get some of the dirt out of the air.
Okay, so, I mean, this guy's helping to run our country. And so his advice is that we get some dirt out of the air. Don't tell that to the, chem clouders, or is it chem clouds? Yeah, don't tell that to them. There's a lot more than dirt in the air. But I don't know, Mitch. It shocks me that these people are in charge. She said absolutely nothing. They just want consumers to continue to spend because their debt and their risk taking is put on the backs of mom and pop who were artificially stimulated during COVID. I almost said the wrong thing, artificially inseminated. But it's a horrible thing. They don't know what's going on with mom and pop. They don't know what's going on with upper, lower, middle class. These people are absolutely out of their minds. They're a bunch of bankers. The Federal Reserve exists to backstop the banks. The Federal Reserve does not exist to help mom and pops. They only exist for the banks. Can you tell us what's really going on in the market when it pertains to tariffs and deflation, Mitch? Or would you agree with what the Chicago Fed president is saying?
Goolsbee may be a nice person as Powell. However, their arguments are 100% irrefutably false. He is a paid economist. He is paid to deliver a narrative. I highly suspect that his ability to add and get in under the hood and do true determination of value is non-existent. And I'm going to take right now the exact opposite position, not from me doing the analysis, but from an outsider doing the analysis. All of the economic reports, the Bureau of Economic Analysis periodic update of the US gross domestic product is the most useless because not only is it politically motivated, but it gets constantly revised so much that by the time we get a somewhat accurate description of how strong the economy is, it is already one, if not 2 quarters later. Today's second estimate of the Q1 gross domestic product, this literally was delivered to me yesterday morning. A quarter, which ended almost 2 months ago, is such an example. Moments ago, the Bureau of Economic Analysis reported that the Q1 US gross domestic product shrank 0.5% at an annualized pace and deterioration from the prior negative 2% first revision, which was also the median estimate, which in turn was an improvement from the negative 3% initial print. That's one comment. So let's take it up one more notch, one more paragraph. While there were few notable changes between the initial report and this first and second revision, the most notable one was in personal consumption, which has continued to deteriorate and was first cut by 1/3 from 1.7% increase in the original print to 1.2% in the first revision, and today to just 0.5%, making this the weakest quarter for personal spending since the COVID crash. Mr. Goolsbee is 100% irrefutably on the wrong side of the argument. The narrative he painted is 100% false.
Okay. Then why is he painting it?
Because he's a paid shill.
Okay. Do they need us as consumers to continue to spend to prop up the economy? Am I off base, or is that would you agree with what I said?
Absolutely. Everybody wants, and there's nothing wrong with that, right? You have to realize what's going on. If we are a spending economy, it's based on Americans being able to spend. But when the government, by virtue of printing the money, has hollowed out or an equity stripped mom and pop, there is no more money left to spend. The only thing that can put this genie back in the bottle, and it's still going to hurt, is eliminating in mass quantity the actual debt that is out there. The school district fraudulent bond debt can never, I'll put that in bold and underline, it can never be paid off. That money doesn't exist to do it. Well, don't you think we should deal with it right now and say, okay, fine, we know it's $7.5 trillion. We know the 5.1 trillion, give or take, is complete nonsense. Let's just slice it automatically and get rid of it off the debt. Those people who are the bondholders are going to get hit. But you have to realize that the cost of carry on a per day basis is in the tens of millions, right? Across the United States, it simply can't be paid off per household. So the point of the matter is, why not just deal with it? Let's get this over with. Let's lower the US national debt. Let's get rid of the derivatives, and let's get the genie as best we can back in the bottle. Because if you don't, at some point, the whole system will just simply blow up, and then we're going to have a greater depression, but it's going to be their fault. I mean, they cannot say at this point, they don't know. There's been over 6 million views on these videos in the last 120 days. These government officials in Texas and across the United States, I've had potential governor for Missouri reach out and say, we need to do this. And then Travis, in a few minutes, is going to go through a very interesting document from a local DA. They cannot say they don't know. Well, if you know, and you know what the solution is, and you choose not to do anything about it, I'm sorry, but that falls at the feet of the politicians. You're guilty. The only problem is you're going to drag mom and pop down with you.
That's what we're saying. Let's move on now to the property tax update. This is the call of action to anyone that's watching this video. And just to give you guys a quick update, our last live, what we wanted you guys to really do when it comes to the property taxes, before you rebuttal people, before you're out there fighting to repeal property taxes, we asked you guys to, excuse me, read the criminal complaint, the first 5 pages of the criminal complaint, and understand the debt, right? Understand that there's a debt, because if you want to repeal property taxes, your first response from people that don't know what's going on is, well, what about the children? What about the teachers? And that's why you have to understand the debt, because the money is not going to the teachers and not going to the children. So if these people that are saying, hey, you're bad because we need to take care of the children, we need to take care of the teachers, those people aren't looking under the hood. So let them know, like, hey, I'm with you. I agree the same thing. We need to make sure that this money is going to where it's supposed to go. But not only that, you guys, remember, we also showed you it's against the 16th Amendment of the Constitution. The 16th Amendment of the Constitution does not allow them to tax our houses. That's a property. So we can never really own that property if they continue to tax us. So anyways, now the second thing we want you guys to do is this. Okay, so understand the debt. And then the number 2 step is now that you understand the debt, the illegal bond debt, we have to now hold these people accountable. Part of the things that we want you guys to do, and we really need your help, and you guys are making a difference on the front line with us, is filling out criminal complaints and turning this into your DA. Okay, now I've already posted 3 responses on my tab on YouTube from DAs. The first response, the DA couldn't even spell my name, guys. They were like, yeah, Mrs. Shakur. I'm like, Mrs. Shakur? My last name's Mr. Spencer, not Mrs. Shakur, right? And then I was like thinking like Tupac, and anyways. So they couldn't even spell my name. The second response was from Montgomery County DA. At least they spelled my name right, and they acknowledged what we were talking about. Like, hey, thank you for reporting this bond debt regarding section 4501, but we don't have jurisdiction. Okay. But the third DA from Fort Bend County, so we're making each response, they're giving us more. Okay, so I'm going to read to you guys now the response from Fort Bend District Attorney. And what I need you guys to do is I need you to help us contact them. Contact them, call them, email them, and help us to encourage them to continue the investigation. I have the Assistant District Attorney contact information on the comment section and in the description of this video. Her name is Valerie. I need you to email her right now and encourage her, because this is what she's saying. She's finally at least acknowledging it. Okay, this is so rewarding. And I want to give a shout out to the viewer, because this is not my criminal complaint. This is Robert's criminal complaint. Robert listened to a live. If you're on right now, Robert, please comment in the comment section.
Randy,
and I want to give
Randy.
I'm sorry, Randy. My gosh, not Robert. Randy. So sorry. Oh my gosh. Randy and Monica. So Randy and Monica in the comment sections, if you guys can, comment there, because big props to you. You guys are patriots. You're doing what it takes. I've seen heads of large organizations of ending property taxes, and they don't do anything. They're just spinning in circles, like Russell Bennett. If you're watching, if you know who Russell Bennett is, you guys need to help me chill that guy's ego out so that we can help each other. All he's doing to end property taxes is deleting my comments off of Facebook when I'm trying to help his members. Check the ego out the door is my point. It doesn't matter who's responsible. You know who's responsible for ending property tax? It may be Randy. Sorry, Russell Bennett. It's going to be Randy that's responsible, because he finally found a DA that's willing to go into what we're saying. I'm going to read this to you guys, okay? So we are in receipt of your complaint checklist directed to the Public Integrity Division. Remember, we have templates. If you're in Texas, do this. We also looked at Ohio. I talked to Beth in Ohio. My God, Ohio's in trouble. In terms of the allegation of fraud by omission and intent to defraud, you state the superintendent and board members of the school district have intentionally hidden documents regarding the new bond amounts. Okay, that's understanding the debt. The Texas Public Information Act, or TPIA, establishes the public's right to access government records. Sorry about that. You may submit a written request, blah, 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 blah. And then here's an example of how to get public information. Let me get us out of the way real quick. I'm going to zoom in here. I'm going to scroll down so you guys can really take a look here. Okay. And this is what she said. And this is going to get really good, guys. Okay. This is what she said. I have reviewed, this is the assistant district attorney. I have reviewed the Texas Education Code section. You guys should know this by now, 45.001, the credit agreements in certain school district. Okay. And here's what I love. While it appears, she's using the word appears. All right. They don't, so she's acknowledging that it does actually appear. Okay. So while it appears the superintendent and board members have violated the statute in terms of exceeding the 25% cap. So thank God we finally have someone at least admit that, right? And again, this is the district attorney, this assistant district attorney. So again, it appears that they violated the cap law of 25%. But they then go on to say, because no one has pushed this hard, no one has gone this far. And again, this was one viewer that was watching a live video that got, I couldn't even get this response. Monica couldn't get this response. There are no criminal penalties listed in chapter 45. So when I read that, I was like, do we also have to do your job on how, civil code and, these penal codes work? Like, do we really have to do your job there too? So she's saying that in the chapter 4501, it's not listing any criminal penalties, but there are other ways to get criminal penalties. Now, she's saying that this office has no jurisdiction to prosecute a violation of a civil statute. So what she's saying is, okay, it's not criminal. That's what she's saying. But it's absolutely criminal, and you must abide by the law. If you break the law, it's a crime. So they're saying they probably broke the law right here, the statute, but it's not a crime. All right. And there's a response to this. Now, they also go on, and this is very interesting, you guys. Regarding your allegations of office oppression, you assert that former superintendent and board members violated the constitutional rights of taxpayers by suppressing the 25% cap with the bond referendum. Based on the facts, it would be very difficult to prove beyond a reasonable doubt. Do you see what she's doing? So she's talking herself out of this because they don't believe they can prove beyond a reasonable doubt. They're not saying the crime or a violation has not happened. In fact, they're saying it's probably happened, but the burden on the DA to investigate and to continue is they must prove beyond a reasonable doubt that the parties intended to deny taxpayers of their rights. So I asked Mitch, I was like, can't we just get the audio recording? Right? These are public people, right? And Mitch was like, no, they're private. Did you guys know that when they're doing and working up these bonds that they have closed door meetings that you and I as the public have no rights to? They just get to spend our money. Did you know that that was private? It's made private. Did you know that? Isn't that crazy to you? They go behind closed door meetings. Beyond a reasonable doubt that the parties intended to deny tax right, the parties could easily claim ignorance, incompetence, and lack of intent. So then what's our option? So we've demonstrated violations. We've demonstrated at the very least ignorance, incompetence, and lack of intent, and we just got to let it keep going? I don't think so. All this is doing is becoming evidence for our continuous push. And a lot of people are like, just give up, Travis, just give up. Anytime I hear that, I laugh. I'm like, are you kidding me? You guys think we come this far, we're going to give up? Absolutely not. In terms of official misconduct, I believe you're referring to an offense called abuse of office capacity. Applying that statute to these facts, the state would have to prove beyond a reasonable doubt, good, so do your job, that the parties intentionally and knowingly exceeded the 25% cap. See, at least they're talking about it. Thank God. For the new bonds in order to defraud the taxpayers in Fort Bend County. While we might be able to prove the cap was exceeded, yes, you can prove that because we have the math. Every school district, we have the math that the 25% bond cap was exceeded. We have the math showing multiple violations. And you guys, here's the thing. I'm sorry, I'm getting worked up. These violations hurt property owners, which in turn hurts every citizen of that county, because they pass the tax burden on to the citizens of the county. Okay, so while we might be able to prove the cap was exceeded, it would be very challenging to show the suspects acted with the intent to obtain the benefit or defraud taxpayers. But what if we can show that the people on the school board were using their family as contractors, which happens all the time? What if we could tie that to? What if any single person on the school board, which are not voted in, everyone that is responsible for this bond debt is not voted in? They talk about it behind closed doors. And we need the proof, right? We need, if we could tie the contractors to their family members, in my opinion, it shows the intent. Okay, but let's keep going, guys. Based on the facts listed in your complaint and analysts explain above, this office will not be opening a criminal investigation as your as your complaint involves civil matters over which the district attorney has no jurisdiction. Okay, so that was the response there. So what they're saying is it's not criminal. There's a violation, but it's not criminal, and because it's not criminal, they have no jurisdiction. But she also just said it's not that it's not criminal. It's just that they can't prove it beyond a shadow of doubt. So which is it? You mean you can't prove it beyond a shadow of doubt, or it's not criminal? I mean, what you saying here? Now, Mitch, will you go into that response from the assistant district attorney, and then will you talk about your own response? Because when we get these responses, you guys, Mitch and I respond to the DA every time, and what we're doing along the way is we're keeping all of the evidence. So every response back, every single person that is listening to us, that is a patriot. Thank you, Randy. Thank you, Monica, that is actually turning these into the DA. I want to thank you from the bottom of my heart, because you're helping every single person by doing that. You are an unselfish human being, and I am proud of you for that, and I am so happy you're on our side. Please do not stop. In fact, if you're listening to this, please take what we're saying seriously. Fill out your criminal complaint, especially if you're in Texas. Ohio, again, I talked to Beth. Oh my God, they have problems. But if you're in Texas, we have an inside track. We can show easily the violations. If you're in Ohio, you cannot do that. We looked into Ohio. You can't do that. Ohio is a diluted mess. But Texas, we have that 25% bond cap. I swear, guys, if you live in Texas, you better help us. You have to help us. It doesn't take that much time. Please reach out. My email's in the description. But if you don't want to do any of that, I need you guys to shoot an email to Valerie. Say you got it wrong. You understand there's a problem, but it is absolutely a crime. Mitch, can you fill in the blanks?
Do you have the email, Travis, that I sent to Valerie?
Yeah. Do you want me to pull it up?
Yeah. Okay. I think it's good for everybody to see the response. I can talk about it if you wish, but
yeah, here it is right here. Let me zoom in here. Okay, here we go. It's right here. Do you want me to read it?
it's hard for me to see if you want to go through it.
Yeah.
But-
So, no, go ahead. Just
Okay.
summarize it.
So
It'll be on
the short form version is, I believe the way that she wrote the response to Randy left the door open. So what I did is say, okay, it's clear you're missing information. Let me help you. So I pointed Valerie to the First Amendment to the criminal complaint, which, as far as I'm concerned, every single homeowner in the United States should read that document. That is the document that was sent to the DOJ and the FBI. That is the document on page 5 that shows how much outstanding fraudulent school district bond debt there is by multiple school districts across the state of Texas. And once a DA understands this, then there is no longer an excuse. This information is irrefutable. This is evidence. It is irrefutable. It is the government's own documents that says this is $343,000 in Argyle, Texas. It's outstanding. Godley, Texas, $120,000 fraudulent school district bond debt outstanding per household. This isn't up for debate. This is a fact. Well, once you understand that fact, there's only one question. How in the world is this ever going to get paid off? And the answer is it isn't. Well, because it isn't, that makes it a de facto fraud. This is what I'm stating to Valerie. Here's the information. This criminal complaint, Valerie, has been filed with the DOJ and the FBI. You don't have to point, as a DA, you don't have to point the fingers at anybody. I've already done it for you. These are the people that are responsible. And you can look in your local district and say, these are the people that are responsible, including the school district superintendents who have committed accounting fraud. Again, it's not an if, it's a fact. When you look at these numbers, look at the amount of debt outstanding. That's accounting fraud. So I put this very nice email together for her and said, here's the facts, here's the trail. By the way, certainly reach out to the DA in Johnson County. Reach out to Helen Kerwin, Texas State Rep in Johnson County. She'll inform you as to what's going on. These facts are irrefutable. So it's not enough to say, well, the law doesn't allow us to prosecute. That isn't true. The law does. It's called aggravated perjury. And the aggravated perjury has occurred both at the central appraisal districts through the registered professional appraisers and the school superintendents. When they stand up and they make public speeches, and inside of ARB hearings, public presentations, which is what an ARB hearing is, and they lie knowingly, that is aggravated perjury, for which is a violation under, I believe it's Texas Penal Code 37.11. And by the way, under federal law, it's prison. So the point of the matter is there is plenty to prosecute here. And what I asked her, I said, here's the facts. You can make your own determination. You're going to do what you're going to do. But the bottom line is, here's the facts. And if you ignore the facts, which hurts the constituents that you represent, I'm sorry, but every person and every DA that does this should be removed from office.
And what you guys are looking on the screen here are criminal complaints that I've done. So I've completed 95% of about 30 different county criminal complaints. So here's like Tarrant County, here's a Harris County, Rockwall County, and obviously there's multiple schools in one county. I got a lot of them in Denton County, Wilson County, and I just want to challenge anyone that's in a group of patriots that are supposed to be taking care of property taxes. Please use this as ammunition. Please have your people fill this out, and please keep us updated on how everything is going down, because we're using it as ammunition. I mean, literally, you guys saw the response from Fort Bend. I don't live in Fort Bend. Mitch doesn't live in Fort Bend. We couldn't have done that without you. So please, you guys, we really need your help. Monica, Randy, we need your help. Call Valerie. Give Valerie the 5 pages of the criminal complaint. Everything's going to be nice and neatly organized in this video. You go to the description, you call Valerie, or if you're in Texas, fill out the criminal complaint, reach out to me, and I will investigate it for you. It takes me about 45 minutes per criminal complaint because I have to find whatever the board was during that year. I have to find the superintendent, and then I do the math. And then I have to get the evidence. So the evidence is like the bond election notes. So I get that. I get stuff from their website. It's working, guys, but we can't do it without you. You see how they're treating us. They will kick us in the teeth if we let them. And I'm saying here, you guys, we've been kicked in the teeth. All right. I'm wearing dentures, hypothetically. I need your help. I don't want to get kicked in the mouth no more. You know what I'm saying, Mitch? It's discouraging.
I want to make a point that every person, every house owner across the United States, now, obviously everybody else can do it too, but every house owner, is 143 million of them, okay? If every person simply looked up, what is the school district bond debt in my district? Then you can go out and say, how many houses are in my district? You take the outstanding school district bond debt and you divide it by the amount of houses in your district, and you will be horrified. Now, you only have one question to ask, and that's going to tell you the truth. Your one question to ask is, can I afford to pay this off? And if the answer is no, that's fraud. Right there. That's the whole story. That's the enchilada. And I hope that Valerie, I don't know her. I think the way she wrote it leaves the door open. So I responded kindly. But the point of the matter is, read the entirety of the First Amendment to the criminal complaint. It's irrefutable. And all the evidence that's in there is deemed admitted by the courts. There's no argument against the evidence because it's government's evidence. It's state's evidence. So therefore, you cannot say that there are no laws to protect the citizens, because if there are no laws to protect the citizens, that means there is no law. Well, if there is no law, Valerie, then why exactly are all of us paying real estate taxes? We could literally stand up en masse and say, you know something? Yeah, we're not going to participate in this anymore. And what are they going to do? Now, that's not the ideal situation, which is why we said repeal the real estate taxes in totality in favor of the uniform state's sales tax. There will be plenty of money to cover off every legitimate expense. But what happens is you get rid of the fraudsters and the criminals in the middle, which are the central appraisal districts, which are the boards at the school districts, which are the school superintendents that are committing accounting fraud. You get rid of all of them. You don't need them. And that is what resets the balance sheet so that mom and pop own the asset, which is their house. They will own that in 20 or 30 years from now, free and clear, from which they will have something to retire on. Today, they've been hollowed out, and there literally is no difference in owning a house or renting. None. They've destroyed it. It must be put back.
Yeah, it must be. And honestly, I really want you guys to join me because my life now consists of recording a video, editing, and helping with criminal complaints. I can't even fish no more because I freaking broke my foot, basically. It sucks. But anyways, here's a comment from Donald. What about going after the bond numbers of officials? So Donald, let me clarify real quick. So the school board is the one that the school board president is often the school board president and his assistant are often the only signatures on the bond election paperwork. The school board, who is not elected, they're not teachers. Okay, they're not actively teaching. They go behind closed doors. They're the people that are responsible for this. Again, the school board. The school board is super important. And guess what, you guys, as property owners, we know we don't vote them in. Not only do we not vote them in, we don't know what they're talking about under the hood. It's absolutely a shocking situation, and they will continue to get away with it if we allow them. They will not change their ways if we allow them to continue this. We have to dust up. We have to kick the dust up, and kicking the dust up is not meeting once a month at a restaurant to complain about how bad property taxes are. Okay, kicking the dust up is doing something different and holding them accountable, and you can't do that by crying. Okay, well, you can cry on your way, but I'm saying cry in the DA's office. Right? Don't just cry at the restaurant with a whole bunch of other people that are crying. We need you guys as the point of, I need you, man. All I'm doing is this stuff, but let's go into our video. We're going to get him out of here.
Yeah, let me
wanna say something
try
else?
something. I want to see if I can connect a few dots here.
Do it.
for Donald. So when you pay your real estate tax, that money goes to the school district. The school district takes that money, $1, and they leverage it up 20 to 1. So not only are you being equity stripped out of your house, but they are making you responsible for their leveraged, fraudulent school district bond debt. They believe there's an implicit guarantee. There's no such thing. I made that term up, but it was the best I could do to explain that they believe you are the implicit guarantor for their debts. It simply cannot be paid off. Well, then that money in mass across the United States turns into about 5.1 trillion of outstanding fraudulent school district bond debt. Then under the hood becomes the derivatives of that money. Well, the school district's levered it up 20 to 1. Do you know that some of these derivatives are levered up 250 to 1? And that turned into long-term capital management when long-term capital management blew up. And then the Fed had to come in and rescue long-term capital management because at 250 to 1, the tentacles across the globe were massive. It could have brought down the global economy. This podunk little entity. And in truth, long-term capital management, they had a very successful run for 4 years and their heads got too big for their britches. And what happened then is they started taking these massive derivative bets. And like I said, the Fed had to come in and rescue them. So this is tied to the derivatives. This is equity strip your house. They believe you're going to continue to pay money that is literally double and triple what your current home mortgage is, for which there is no money because mom and pop are out of money. This is delusional. And so the reality is the numbers on the bonds are so bad, it cannot be paid off. And although you say, well, it's just 5.1 trillion out of, let's call it 36 trillion of US national debt, that's not the whole picture. The whole picture in the United States is roughly 200 trillion. So even if you said, okay, it's 5.1 trillion against the 200 trillion, here's the thing. It's big enough to take down the US economy in and of itself. And it's for nothing because it never existed. It's a direct ramification of the Federal Reserve printing money. And this is a direct ramification of the Federal Reserve existing in the first place, for which it has no justification to exist. It was created to stop the banks from having a bank run. No, let the banks have the bank run. Shut them down because they shouldn't exist. If they can't manage their money, they shouldn't exist. They don't have the right to be backstopped by the US government. So the point is that connects the dots for everybody to understand. It is a fraud. It is a fraud on a mass scale. You either fix it, get in front of it, or it will run you over. That's how big this is.
Very good. All right. Thank you, Mitch. I'm going to do a video, then we'll do our house market update. We're pretty much done. Video is going to be on pending home sales. All right. So let's listen to some update on the housing market now. Hope you guys enjoy. Let me know that the audio is okay if you don't mind.
Well, David, pending home sales in May rose 1.8% from April and were 1.1% higher than May of last year. That, according to the realtors. This is a small beat. The street was actually looking for basically flat. Now, this count is based on signed contracts. So people out shopping in May when mortgage rates were climbing and briefly went over 7% on the 30-year fix. Regionally, sales were strongest month to month in the Northeast and West, but compared with last year, sales were down everywhere except in the South and Midwest. Midwest is the cheapest, of course. South is where they have the most for sale. So, okay, why the tiny gain with rising rates in overall sales? It's likely due to all more supply. There are 31.5% more homes for sale now than there were at this time last year. But just for perspective, the pending home sales index, while slightly higher than it was a year ago, is hovering around the lowest level in 24 years. It's just a few points higher than it was in April 2020 during the pandemic shutdown, that 1 month drop. Now, yesterday we got the report on new home sales, which is also based on signed contracts, and it tanked well over 13% for the month. New homes are more expensive comparatively, and there are very few new builds at the entry-level price point. So really, Sarah, it is just all about affordability and lack thereof.
Okay. Mitch, you're on mute. Go ahead. I'm going to tee up my MLS. Do you want to respond to what she said real quick as I'm teeing this up?
There aren't enough homes at the entry-level price point.
Yes.
Okay. Just dig in a little bit, for crying out loud. It's just like the market is the market. The market will fill the demand. If the demand can't afford the product, that's why it doesn't exist. Does that not tell the person who's creating this narrative the truth? In other words, they've got no interest in the truth. She doesn't know what she's talking about. She can't analyze it. And she points the finger. The realtor said. What realtor? Who said it? When did they say it? What was the context? And do a little research instead of spewing complete nonsense.
Okay. Well, speaking of research, let's do some now, starting with inventory for existing. So here's the inventory for existing. You guys will see that obviously supply is outpacing demand. Literally all of the laws of supply and demand are in our favor. If you want deflation, a bit of deflation, even if you own a home, I'm sure you want it. It will help your property taxes more than likely eventually. But as far as inventory, we are not well over, but we're over 1 million, sitting at 1.036. We have no more active listings overall. Now, the market is bifurcated. The East Coast is on slim pickings, whereas Texas, Florida, we're freaking skyrocketing. So it's bifurcated. But overall, we have more inventory than we did going into the lockdowns, barely. Okay, barely. So we got more room to go, but we're fine. That pendulum has swung, right? It's swinging. And you can see that in this chart. But this is just existing homes. So we're up above pre-pandemic, but still low-ish for normal times, right? But also take a look at this. This is crazy. So this is monthly supply for the new houses. So this is not existing. And remember, I don't know how many metros I've been to now with Melody Wright. Melody and Wright and I have been to probably like 20 top metro areas, and we take you guys to, and you guys can go back to my channel under the playlist Metro Report playlist. And if you guys go back, you'll see us going to new construction communities, and we report that they got 2 to 3 times more inventory than what's being reported. In fact, the information you guys see on this on your screen right here is reported by surveys, of which 30% roughly of people, builders, they don't even fill out the surveys. And you're putting a survey in someone that has a financial bias. So this is survey information. Most people aren't even filling out the survey, but regardless, this is saying that right now we have 9.8 months of supply for new homes. Now, if I were to go back to the year of 2000, let me show you what we were at going into the global financial crisis. So the global financial crisis, let me go to December of 2007. So going into the global financial crisis recession, we had 9.6 months of new homes, which means right now, according to this data, which I would question, I would assume safely that there's actually more than 9.8 months. But if we were to trust the data, we have more inventory now than we did going into the global financial crisis. That's a fact. So in other words, the demand is not there. Okay, the demand will be there once what happens, guys? You guys already know. So once demand will come back once the prices have gone down. Until the price, people know that the interest rates only matter so much. Obviously, if the rates drop to 3%, that would also kick up some demand. Now, I want to show you guys this real quick. Let me go to my search on MLS. And I want to show you real quick. So here's my Houston multiple listing service, and I want to show you how many listings we have right now. This is insane. Okay, we have hyper supply in Houston. We have 71,000 listings in Houston. Now, say you're out of town or you just moved to Houston, you're like, whoa, 71,000, where do I start? Right? Everyone's like, oh, where do I start? Okay. You don't start by jumping into 71,000 listings. It's way too noisy. What you do is you start, at least I do, I just start by filtering the data because I only want to look at houses under market value. So I go by price per square foot, and that takes 72,000 listings and it converts it to 2,500. That's it. So I go from, what is that? How much percentage is that? About 3.5%. So again, from 71,000, now I can find 2,500 in seconds, guys. And this is how easy the math is, right? It's very easy. In seconds, I converted that. Now I'm going to show you guys a map. Okay. And now this should show you only homes under market value. Remember that. And what I want to do is I want to show you how new homes, okay, are the prices of new homes, as you see here, are now corroding the prices and deflating the prices of existing home. So you guys can kind of see this. Let me zoom in. Okay. See that right there? You guys, that's a new home development, right? Community right there. So all that like land right there, you guys see, that's a new home community. Now this new home builder, he has 2 under contract at $103 a square foot. They have 1 active listing right here. But as the builder continues to cut prices in this community right here, that means that all of these other neighborhoods have to compete with that builder going under market value and offering insane buying incentives. So this subdivision suffers. This subdivision I'm circling suffers. This one suffers. All of these houses surrounding this new home community suffer because in order for these people to sell their house, they have to convince them that, hey, buying new construction is a bad idea because it's going to blow down in a windstorm. Right? Yes, it is. And also spend more money on this house because it's going to survive a windstorm. I mean, that's literally the only thing you can say because the numbers, you can't compete. But let me show you guys. Look at this. Okay, so this is a new house. He just dropped the price again, another 30, what is that? 40,000. So this is down 40,000 and it's being sold for $117 a square foot. But there's also, like I said, guys, there's 2 under contract right now for $103 a square foot. Again, what I'm trying to show you is new homes. I mean, it's a completely different market. There's a lot of turmoil with the new home market. They have excess hyper supply. They're cutting the prices because they know that the buying incentives are no longer working. I showed you guys Lennar's offering that 3.75 with $50,000 price cuts, an appliance package, and they're still coming out. Their CEO came out and said, we have to lower the prices in order to sell. And I'm going to tell you, Lennar, I showed you at the beginning, to get to a 3.75 from a 3.25, that could be $40,000, $50,000. So the reason why they're not taking that $40,000, $50,000 off of the top of the house, which they could do that. They could do that. Think about what I'm saying. They could right now, instead of buying the rate down, say that costs $50,000. They could take that $50,000, let you get the market rate and reduce the price by $50,000. They could do that and make the same amount of money. But why are they not doing that? Why are they not doing that, guys? They're not doing that because they've already manipulated the market to bring prices up. If they start reducing prices too much, they inadvertently crash the market. So they want to do everything they could do before they reduce the prices on houses. So stay strong, you guys. Mitch, anything you want to cover on the house?
Pretty well lit. They're also taking a reverse internally, right? So if you look at it this way, they're taking a reverse mortgage on what it is they're selling. So that extra $50,000, they're getting a slice of it over the long haul. Now they'll discount it forward to be able to pick up the cash today, but nonetheless, they're still making money even on the overage of the $50,000.
Okay. Let's see here. Now, if you were to buy a new home, what safeguards? That was a big if. You know what? I'm gonna double down on this question. If you were to buy a Lennar home, so number 2 home builder in America, what safeguards would you suggest someone take in order not to get bamboozled by a piece of crap overpriced house? What protocol would you suggest?
Completely ignore any salesperson. And if you're going to buy a house, hire an independent entity that knows how to do home inspections. You can literally hire building officials to come in from an outside jurisdiction and say, here, inspect this house. And one of the problems is I'm still seeing it to this day. In the 1960s, they started putting houses where the top of the slab, so your floor is top of slab, is only a couple inches above your outside grade. Well, when you get these massive downpours that you get here in Texas, your rain can literally come up in your yard in a matter of seconds, 3 inches, which means you're taking on water. It may not come into the house, but it will get into the walls, right? If you've got weeping holes from brick, it'll come into the house. Well, I went to a subdivision a few days ago in Carrollton, and lo and behold, it's the exact same nonsense. They didn't bother doing any additional dirt work, which means raise the grade a little bit to at least get the top of slab 5 to 6 inches above grade. Well, what did you just buy? If the base of the house isn't good, either is the rest of the house. You're going to get stuck at some point with A, flooding, or B, mold. Pick your poison. You've got to be careful as to what you're buying.
You do have to be careful. Couple Les. Oh my God, Les. Les is like the new Johnny 2.0. Les said, Travis, stop it, Les. Stop it, man. Lennar has the home of your dreams available right now. You should go buy. Les, I love you. Stop trolling me, Les. But he did say something that I like. You know, well, not that necessarily that I like. It's just kind of the way it is. He said you beat the system by owning assets. And I want to respond to what he said here because it brought up some things. There's a channel, Mitch, called Minority Mindset. And Minority Mindset, he put out a video recently, I think got like 400,000 views on how to quit your full-time job. Right. So it's like you can invest in things to quit your full-time job. He's like, if you make $80,000, here's what you would need to do. So he starts out by saying you can invest in treasuries. And I'm already like, dude, you're going to start with treasuries? Like, okay, so you would need $1.4 million to stop your going to your $80,000 job. Like, what person making $80,000 has $1.4 million? That doesn't make sense. But anyways, let me tell you what I really respect about Minority Mindset. He's like, hey, the system sucks. It's designed to, if you're not financially educated and if you're financially illiterate, the system is designed to penalize you and to profit off of you. So his point is like, I'm going to give you the information. You guys do what you want with the investing. And to Les's point here, and this is why I respect his message, he's like, the system may suck, but I'm going to teach you it so you can get ahead. Because unfortunately, the way the system is in order to get ahead, you have to be involved in it. And I'm like, okay, got some good points there, right? I like that points, but and that's why the gold and silver. So the gold and silver allows me to kind of be independent of the system because the gold and silver is a rock and the gold and silver is beating the system. But I just wanted people to know, and I want to respond to that. Like, I'm not so ignorant to know and arrogant, maybe I'm both of those things, to understand that, hey, I know that people are still playing the system and they're getting filthy rich off of it. I get that. I don't personally want to be a part of it the same way that they are. Things are overvalued. In order for a lot of these people to make profit, they got to gouge people's pensions and their 401ks. If you guys are taking advantage of index funds or gold and silver, I think that probably is a smarter idea. Now, Mitch, what is your, and we'll end this out here, but what is your thought on, if you want to be successful, you got to play the industry, you got to play the system, or the system plays you?
No, wrong. And the reason why is because the only way to beat the system is to obtain a margin of safety. If you cannot obtain a margin of safety, you have no business playing, because the vast majority of people, A, are not traders, B, they're not developers, C, they get stuck in the middle because they're being bombarded by all the nonsense that's coming at them every nanosecond through emails, billboards, websites that don't quite understand what the math is. And if you don't understand the math and you don't understand an amortization schedule, you're the frog in the boiling water. Yes. So the answer is no. The only way to look at it, if I buy an asset, do I have a margin of safety? Did I buy this asset at a discounted price to withstand the problems that you can clearly define on your own? You don't have to trade it. You have to understand it and then take advantage when it shows up in front of you. So if you buy a house today, let's say at $103 a foot, of which there happens to be one, because I was looking at it with Travis yesterday in Houston, And the market value, generally speaking, in that vicinity is $135 a foot. That's not a bad day at the office. Now, is it a good deal? It's a nice house. Does it have problems? Could be. Could it be bought cheaper? Could be. But if you look at its current market rate and then say, okay, what would on its current rate that's on its market for, can I buy that with a better margin of safety to withstand the problem? What is the problem? The real estate tax. Can I buy this to withstand 3 or 4 years of overvaluation of real estate tax? If the answer is yes, and you bought it at that value, you've got something. You've protected yourself. Same thing goes when buying a business. If you buy a business at face value and you think that that thing is going to produce the second you take over as new ownership, you're wrong. You can figure there's going to be a 30% downdraft in gross revenue and net revenue. Now you have to rebuild it in the way that you believe you can rebuild it. Well, aren't you better off buying it with a margin of safety up front, knowing full well that there's going to be a 30% downdraft of gross revenue?
Okay.
The answer to the question is buy with the margin of safety, buy with the discount.
Okay.
And we're headed there. I mean, you can look at this market now, but gold is on a pullback, silver is on a pullback. Would you be better off buying it on a pullback versus every time it pops up? The answer is yes, because you bought it at a discount. You buy a business on a pullback, the answer would be yes, because you bought it at a discount. That's the trick to all of this.
Okay. Oh my God, Les. All right. Where's Johnny when we need Johnny? I mean, Johnny, you've been replaced by Les, buddy. I'm sorry. Les, you got the trophy now, man. Keep it up. I love you. All right. So we got a super chat from Strength and Endurance. What a great name that is. I thank you, Strength and Endurance, for the support. And this is so funny because we were talking about this yesterday, Mitch. Okay. And we talk, I think we mentioned platinum in our last live, and you're like, I don't know about platinum. It's not like, I don't know about it. And then I think yesterday platinum went up. It was yesterday or the day before, right? It went up like 6%. Remember, we were talking, we're like, oh my God, platinum went up more than gold and silver. So first of all, do you suggest, it's a two-part question. So do you suggest investing in platinum? And if so, would you suggest investing in platinum over gold and silver?
No, absolutely not.
Why?
Platinum as a precious metal is perfectly fine as a minor component of gold and silver portfolio. So platinum has underperformed for years as compared to silver or gold. And what you saw yesterday was more than likely a big buyer of platinum, probably at the COMEX, making the attempt to take physical possession. When you see a move that's up 7%, that's called a squeeze. And remember, this is in the futures. Well, if that person or entity wants to take possession and they've got to figure out how we're going to get that amount of metal back into our warehouses to give them possession, they are doing a squeeze on the COMEX. More than likely, that's what's happening. On the other hand, as a private person, if you look at platinum, you can buy it. You will make money with it. There's no doubt about that. It's going to continue to run. At one time, platinum was actually higher per ounce than gold. It's just simply now that it has underperformed for many years. Is this the time? Yes, but wait for a pullback. And coincidentally, we're even getting a pullback today. So typically speaking, from a investment perspective, and if you're a trader and a technical perspective, you wait for what's called 10 bars, 2 legs down. You get 1 leg, pull back, 2nd leg, and somewhere down here is the optimal buy. When you see the 2 legs down, that's when it makes sense. But you must realize as well, it comes with a different premium going in, and it comes with a different premium coming out. And the buyers of the platinum coming out when you decide to sell, let's say, if you hold precious metals, there's simply no reason to sell. You just hold them because the system has got so many problems, and until they address it, you're better off just keep accumulating. But the fact of the matter is, when you go to sell, you will have to return it to one of the big bullion dealers. Typically speaking, the local coin dealer shops, they can't handle it. Whereas silver and gold, they can handle that instantly.
Okay, very good, Mitch. We're going to move on to the conclusion of the video now, which is a call of action. I want to remind you guys, in the description of this video. Please contact and reach out to Valerie, provide her encouragement to continue the investigation, even thank her for investigating as well. And again, we need your guys' help. Don't forget to go here. This is the Real Estate Mindset website right here. And this is the criminal complaint tab. And these are the criminal complaints I've already made. This is actually on the homepage. Criminal complaint tab is here. So you guys can download, for example, if you live in Montgomery County or Harris County, you can download the form. It looks like this right here. So you download that. And then after it's downloaded, I just wanted to show you guys, this is all you have to do to complete this. Seriously, look at this, guys. This is all you have to do to complete this. This is crazy. You put your name, look at your name, your address, look at on the other page, your name, your name, your name. Scroll down. Look at this, guys. Look at how easy this is. Put a little story on how property taxes affect you, like I can barely afford to live, your address, your name, and you sign it. I've literally already done all of this section right here. This is a section that takes a little bit of time. This is the math section right here. So each of these counties has its own, and criminal complaints has its own math worked up. And I list, like, for example, this one, it's showing the district on November 8th of 2022 allowed a bond election of 289 million. And then I go over how much it was violated. I mean, I go over everything, and then I name the parties on the top right here. So like every criminal complaint I do, I have to find out who the school board was during that time. So I tracked down the superintendent and all of the school board members. But I really need you guys to please take this seriously. It's all right here. Go to the website. Here's Mitch's website. If you have an active lawsuit, reach out to Mitch. He has all of the evidence here. All of this evidence should be able to help your case. That's mockingbirdproperties.com. We need your help. Contact Valerie, the assistant DA. Fill out your criminal complaints. Reach out to Mitch and I. Join the movement. Become a patriot. Do not let them continue to kick us on the ground, because if we do, they will continue to do it. They have no incentive to stop. They have no incentive to stop. We have to give them that incentive. I'm telling you guys, I need your help. Mitch, anything you want to say before we get them out of here?
Yeah. In addition to filling out that criminal complaint for your local DA, send it to U.S. Attorney General Pamela Bondi at the DOJ. Send a copy to Kash Patel at the FBI. And this is important. And the reason that it's important, I was just told late last night by a little birdie that potentially the bill that I wrote for the state of Texas at the request of Helen Kerwin is coming up again in the new session. In addition, I was also told that Governor Abbott plans on calling an emergency session over these real estate taxes. So the more pressure that is put on at the DOJ, the FBI, I don't know what the SEC is doing. I know they're doing something, but I don't know what. The point is, the more pressure that is put on, the faster this comes to the surface. And there is no other solution. If there was, I would have figured it out. There is no other solution but the repeal of the real estate taxes in favor of the uniform states sales tax.
Oh, we got them. We're not giving up. I see there's people, no, you can just give up. I told you it's not going to work. Like, no, I'm not the type of person that's going to roll over. Yeah, it's working. I'm not going to roll over. I'm going to get beat up, but I'm not going to roll over. I get beat up all the time, and I hate it. But again, if one last thing, if you guys know, anyone that is taking a charge to end property tax, please send them our way. If you guys know Russell Bennett, just ask him, like, hey, why aren't you working with those guys? Why does everything have to be in your name? It's not about pride. It's not about ego. It's about like effective solutions, right? Like, what's the result? Like, what did you accomplish here? And these other guys with these other tax bills, I mean, it's been around for 10 years. It doesn't work, man. It doesn't work, man. So you got to adapt. Join us, for the love of God. Check your ego at the door, Bennett, please. I mean, I got all the text messages from this guy. I don't understand why he's suppressing me. I mean, don't you believe in the freedom of speech? But either way, I believe in the freedom of speech, and I believe in we, the people. We need your help. Take everything we're saying seriously, guys. Fill out your criminal complaints. Reach out to us. Join the movement. We're making it as easy as possible. And other than that, if you guys are out there enjoying your Friday or enjoying your weekend, investing in real estate yourself, whatever it is, you guys already know, we wish you luck from the bottom of our heart. Thank you for joining us. And above all else, we hope you win.